the industry's maturing right now. And as it matures and it shakes out this leverage, and as we get clarity between what's a commodity and what's a security, and as these exchanges get regulated, I think that the trading leverage disappears and the opacity disappears. And you can already see right now the volatility is decreasing year by year and quarter by quarter in this asset as it matures.
Bitcoin's price has now neared $20,000, and it extended a 12-week slide amid weak macroeconomic sentiment and contagion risk from within the crypto market. Crypto lender Celsius paused all withdrawals earlier this week, citing extreme market conditions, leading to questions about the firm's liquidity. Prominent crypto fund Three Arrows faced at least $400 million in liquidations and scrambled to lower its collateral levels by selling key positions. The decline gathered more pace, with the leading cryptocurrency Bitcoin sliding under 21,000, dropping for the 8th consecutive day and losing 30% over the past week. In today's video, Bitcoin bull and CEO of MicroStrategy, Michael Saylor, addresses the issue of Bitcoin crashes, volatility in the market, rising inflation, and Bitcoin as an inflation hedge and a dominant digital network. He also updates about the possible reasons behind recent fluctuations in Bitcoin's price and his outlook for the cryptocurrency. Make sure to stick around to the end of the video, where Michael Saylor explains the two major liabilities that Bitcoin has been struggling against. So without wasting any time, let's dive right into the video.
Yeah, Bitcoin's two things. First of all, it's a non-sovereign store of value asset. So it's like a digital gold, but you can't make any more of it, and you can move it at the speed of light, and you can program it on a computer. And so that makes it interesting to people that would be gold bugs. But it's also an open monetary network. So I can move $1 billion from here to Tokyo and back again every hour. And I can't do that with gold. And so that makes it very interesting to big tech investors. So we actually think in a world where it's very difficult to move physical things around, it's hard to ship things on container ships or fly them around in airplanes, and supply chains are snarled. In that world, what you'd like is a pure block of digital energy that moves on a digital or a big tech network at the speed of light. And so Bitcoin kind of represents the best of both worlds. It's an inflation hedge because you can't make any more of it, and it's a store of value. But it's also a big tech dominant digital network like Google or like Apple or like Facebook. And of course, those have done very well in the past decade.
Bitcoin traded as low as 20,169, a level that was previously seen in mid-2020, and market Bitcoin highs in late 2017. Concerns around a sharp tightening of monetary policy are weighing on financial markets and are trickling down into the cryptocurrencies through their influence on large institutional investors. It is not surprising that Bitcoin and Ether are dragging the entire cryptocurrency market down in such an environment. The U.S. Consumer Price Index, or CPI report, for May showed an inflation in the world's biggest economy hit by 8.6% on a year-on-year basis, 0.3 percentage points more than expected of 8.3%. The data sent global markets downward earlier this week as investors priced in further rate increases as the Federal Reserve, or the Fed, tries to bring prices under control. The fall in equity prices comes as traders expect companies to report lower revenues and consumer spending. Furthermore, some observers expect central bank actions to further impact Bitcoin prices. Over the past couple of years, cryptocurrencies have become a global macro asset, so it is to be expected that they will react negatively now when investors realize that central banks haven't reacted nearly as aggressively as they will need to in order to get inflation under control. The global economic environment is becoming extremely tough to navigate for investors involved in all kinds of markets. So it is no surprise that Bitcoin is also facing increased downward pressure.
Yeah, I mean, I think you put your finger on it. The two big liabilities that Bitcoin has been struggling against are the fact that it's been trading on a bunch of different unregulated exchanges that could have up to 20x leverage or 100x leverage. and the fact that it was cross-collateralized with 19,500 other cryptos. Many of them are unregistered securities. A lot of them are very opaque.
Crypto investors are nervously awaiting the U.S. Central Bank latest interest rate increase, which many observers now believe will be 75 basis points. Harsh inflationary medicine that seemed unlikely until the Consumer Price Index showed inflation continuing at 4-year highs. Whether hawkish policy can tame inflation without sparking a recession remains uncertain.
And so when you have lots of other assets that are being traded on a Saturday afternoon with leverage, that are either they're being lent to buy and sell Bitcoin, or Bitcoin is being pledged to buy or sell these other things with 20x leverage, you're going to get volatility.
Although stocks were calmer after the previous day's battering with the S&P 500, Dow Jones Industrial Average, and NASDAQ all about flat. Gold, a traditionalist safe haven asset, was also down. However, a reminder of the degree of skittishness among investors. Wall Street was quick to fade the morning rebound that stemmed a modest improvement with producer prices, possibly providing some hope that core inflation continues to ease for businesses. Meanwhile, bad news and disturbing trends continued to plague crypto markets, with exchange giant Coinbase announcing the layoff of about 18% of its workforce, some 1,100 jobs. The cuts were the latest among major exchanges, following those in recent days by the Winklevoss twins-led Gemini, Middle Eastern-based Rain Financial, and Latin America-based Bitso and Buenbit. If Bitcoin breaks below the $20,000 level, support might not emerge until the $17,000 level. Another crypto plunge might not see major support until the 2019 summer high around the $14,000 level. Bitcoin's price is in a tight spot and subject to some ferocious moves in markets where every asset class has seen outflows of money. Unfortunately, risk assets like cryptocurrencies and stocks have sold off more than bonds and commodities, with only one victory in the Forex market, the US dollar. Apart from some dip buying, which is not likely to be a match for the current bearish pressures dominating markets, price action is likely to simply run further down as the predominant themes are unlikely to fade anytime soon. Currently, more than 1/3 of all traditional hedge funds are investing in digital assets, according to this year's Global Crypto Hedge Fund report from PricewaterhouseCoopers. So, what do you think is the key factor behind downfall of cryptocurrency market, and specifically the Bitcoin crash? Tell us in the comments. Also, don't forget to like and subscribe. See you with the next video, and thanks so much for watching.